The following content is an update and technical analysis on Formfactor Incorporated, a company of the technology sector here off the daily interval, where I had mentioned as a scale-in short trade setup on the top of this primary reactionary high downtrend line off the January 2022 highs. And thus far, the entire trade coming in, we ended up back testing it 2-3 days in a row there. Again, just scaling in short amongst that key inflection point, and we knocked that first target down to 29.61 price support for a 7.4% crash there. And you take away the lines right to the button, right off, especially if you're an active and or day trader. Ended up getting bid up right across the board. It was good for a 1.4% gain in a single day, with a continuation rally the following day there for 5.9% in gains. And we just had a very upswing, very volatile day that following day. This event has unfolded as a much anticipated Title 42 catalyst play, and just leading to a heightened volatility across various markets of this sector, which with each potential catalyst capable of triggering the next significant market movement. I maintain a bearish stance, and I continue to incrementally increase my short position. So again, I believe they're going to bite. I feel like there's going to be a reversed probability move. We should see some more downside to come. And again, I've added this new benefit of a doubt primary uptrend line here against these reactionary highs, same length. And bull traders, dip buyers, long-term investors, they want to see a solid breakout above. Well, I will begin scaling out above if they end up pushing through that key inflection point, back testing it, and then moving on forward to the upside if I am wrong. For the potential catalyst to move in the opposite direction. I'll zoom in here to the moving average convergence and oscillator, and they have basically flatlined here. Looked like we were about to get that bearish crossover. We never got it. So, but again, these negative divergences again just continue to establish and build, and it's starting to look like that. That is a we do have confirmed RSI divergence, nice steep divergence there, and we'll see if the rest of the momentum indicators start playing out there. But again, that should be a pretty nice catalyst for a move to the downside if and when we get it. And again, nice to collect profit off that first target, which coincided with that 50 exponential moving average. And if we ultimately take that out, I would only suspect a much larger strength of selling to the downside off that dual support. Call it the 50 exponential moving average, hovering down below that 29.61 price support for a prolonged move down to that next target at 27.99 for another 9% crash down, where I favored that primary reactionary low trend line there for a 13% crash. And really what was so much more significant in all the occurring developments that had it transpired within the last few days was a pretty decently defined, not the most aesthetically pleasing, but again, a 3 black crow bearish continuation pattern here off the hourly interval, but at least one to be absolutely respected. Whereas we have here on the hourly, which you would call exaggerated, confirmed negative and bearish divergences amongst all 3 technical momentum indicators, with a potential looming crossover if we get that and start to melt down and take out that 50 hourly moving average tomorrow on a complete overshoot of the backfill, the gap there, which will result in again just continued damage here in the momentum indicators for a much larger move to the downside.